Hi friends, how are you today? This is the weekly review for 7th of November, the second week of November. How was your weekend? I hope everything is good and we are getting ready for another volatile week as we're getting closer and closer to the end of the year. As you know, usually and normally on normal market conditions we have end of year rallies and we have, well, little less than months and a half because on the last week of December, even more, it's not tradable time, so the actually the clock is ticking and we don't have a lot of time left. The European leaders had a meeting again, actually G20 meeting, so not just European, again during the weekend, and they had discussed about Greece problem. The Greece problem that keeps bringing a lot of volatility to the market, a lot of zigzag moves, which keeps and makes the market moves very difficult. Well, Papandreou, the Greece prime minister, won his referendum vote, and they're going to avoid it and will not have the vote as the European leaders wanted to. The people actually ask Papandreou to get out and to sign out. Also, new speculation about Berlusconi from Italy. So as we can see, more and more countries from Europe tend to have problems, issues. We are going to see many zigzagging days, as we saw last time, like here, up, down, up, down, up, down. See these three spikes here? Three on the last week. Wow, it doesn't happen a lot. Three in a row, right? We can see small candles body, a lot of big spikes in about something like 200 pips almost each day, little less. It's just crazy. The markets probably will continue to go this way as long as the big questions about the euro well, are still there. So let's take a look on the chart, and we're going to have many this week, as many things most likely could happen. Let's discuss for two scenarios for the euro dollar. The bullish scenario is very simple. The break above this trend line, the long trend line that we have just right here, a break above it will most likely lead for another ride to the euro dollar. Again to 145 or even higher to 150, who knows. But with all the European issues, we also should be prepared for bearish scenario. As you can see, it's a flag, triple, well, I don't call it dodges, but triple small candles flag. The bearish divergence press it down. How the market will open, how it will react for the actions from the markets, from the leaders, it's a great question, and we should be prepared for each of the scenarios. If we take a look here, it's also a trend line, just started from here and goes all the way this way to create here a flag. So a break below it and some close below this area, which is critical area, begins to be critical area, the 136.85, 80, even little lower. A clear close below it based on daily chart should and most likely would give the bearish call, and the bearish call should take us once again to 132 or even much lower. Based on weekly chart, we could go even for new lows for the euro for this year. It's going to be interesting period. So we have two scenarios, daily chart breaking above the downtrend line, the long trend line. This one we talked about will take us high again, most likely for new highs, but breaking below the flag and the bullish trend line will take us for the down move, for new lows most likely. Aussie dollar, same story, as we can see, with two possible scenarios. This high still has to be tested, but let's see what we have. We have a trend line here which is well shown on the 4-hour chart, and it's actually also a flag, three candles, which two of them are dojis, If it breaks below it, close below the 103, and we have RSI cross the 50 down, it will give us the bearish call, and the bearish call should take us to the parity level once again at least, or even much lower. What about the bullish scenario? I believe that bullish scenario will happen only and only if this flag will be broken up, but more than that, if we have a close above 105. Then and only then we can discuss about next leg for the Aussie dollar to raise up. Another interesting, amazing pair to follow. What about the euro pound? Another interesting pair that investors think that's going to be bearish, and I must agree with them. We have the 0.8550 critical support area, as you can see, and we have also kind of a flag, right? Kind of a flag here on a daily chart. MACD keeps to be bearish, RSI and everything keeps to be bearish, and now we might see a breakdown. This is might be a first leg of the down move after all this sideways move. As you can see, it might be the first leg, then the second correction, and the third that might, according to the investors, take us all the way back to 0.80 during some ride from now. This bearish candle from the weekly chart should provide this correction. So a close below the 0.8550 on daily chart should be enough to attack the down move, with stop loss of course above the last high, or even just for protection above the 20 MA on the daily chart, should give us the good sell call. Target 1 might be considered as a very strong support area here around the 0.8350, target 2 at 0.80. Another, from my point of view, amazing pair to follow and to short. Let's continue for the next interesting pair. Next interesting pair we have will be Swiss yen. Take a look on this pair. Interesting stuff, isn't it? After big zigzag up, big amazing crash down, we have a correction that bring us back to 0.90 around the weekly 20 MA. Now, based on it, we might see a return down for the lowest levels again. Based on daily chart, that's what we have. We have a trend line, we have a kind of channel here, and we have a continuing divergence, as you can see. This continuing divergence might take us for the down move. How we can join it and how should we join it? A break below the line, a break below the support around the 87, close below the 20 MA, and cross, very important, cross of the RSI of the 50 level would give us the bearish call. Bearish call should take us to 84 again, or even to new low. So target 1 should be considered as this support around the 84. Well, 85 might have some issues, might create some issues for this pair. If it breaks successfully the 85, then 84 is clearly target number 1, and 80 or even lower will be the next target. So Swiss yen is another great pair to follow. What next? We have a lot of them. Let's continue. Dollar yen. This pair, based on the weekly and the monthly chart, should make the move higher, mainly because of the intervention. But based on daily chart, we have a stiff support here. As we know, the dollar yen, it never does a clear move before some zigzags. If it makes the zigzags here to the support area, it could give us an amazing sell call, buy call, sorry, just from the low, and expect to go all the way up again. The dollar yen, based on monthly chart, should go and reach the 81 or even higher, which is the 20 MA. Isn't going to be clear? Well, not sure. It's dollar yen after all. And the intervention should make the bullish call, but I think that it would happen only if it makes the return. That would be the best way to join. If it does not make the return and close above the last high, should do the job. Last close price, sorry. which is around the 78.35. It should do the job if we have daily close above it. If not, the support should provide a good buy opportunity. What about interesting pairs as Euro Aussie? It does make the correction, it does zigzagging around. What should happen next? Well, as it looks right now, we might easily have another down move to have continuing for this bullish continuing divergence. If it successfully breaks and close above the 133.7, just right here, and the 20 MA, and the RSI crosses up above the 50, it might be a very beautiful bullish call, and this bullish call could take us all the way for next serious level 135 or even higher. If it successfully breaks through this trend line, most likely we are going to see the Euro Aussie reaching the 130 again, or even 129 again, sorry, and maybe even much lower to create new lows. If this sideways move on the weekly chart will be broken, it's going to be a beautiful ride down, long run for Euro Aussie. So another pair to follow and to watch. What about the indices? Well, let's take a look on interesting situation here. Indices. Weekly chart, same story as the euro dollar. We have a trend line. A break above this trend line will open the door for the rally, and the rally might take us to 1430 even. To 1430 even. Who knows? But based on daily chart, it's not so clear. We have a trend line here that is well shown on the 4-hour chart, right? The last trend line of these zigzag moves, and we have some bearish continuing divergence, as you can see. A break below this line, well, actually below the 1220 and daily close below it, and RSI break below the 50, of course, which is very, very important, should open the doors for the next leg of the down move. Two scenarios as well as for the euro dollar. We have a trend line that has to be broken so we can ride up all the way to the highs, or even for new highs around the 1430 or even higher, and a break below this line 20 and RSI 50 level should provide the sell. Two scenarios that each of them could happen. Actually, it's all up to the Europe crisis right now. So we have a lot things to follow. We should go with it and look for this trade. Of course, there are much more interesting pairs as the dollar franc as well. That a daily close above the last high around the 0.8885 should take the up move, but it's all up to euro. The European debt is the one that has a crisis, and we should wait and see how it's solved there. So friends, these are the trades I suggest to concentrate. Of course, there is another one, the Aussie Kiwi, which I shared with you on the blog earlier. I believe it's only a question of time until this pair make the correction. It has here and here stiff resistances. It should, I believe it should and would go all the way back to the stiff support 128. If it breaks through these areas and make the continuing divergence continue even more, as you can see for new highs, the next level to watch the sell will be around the 133 and 134, something in between. And this pair, it's only a question of time, I believe, until we have a real serious correction and crash down. So I believe that this is the time to begin to attack the Aussie Kiwi. That's all for this week, friends. I wish you an amazing week, beautiful trades, good profits. Thank you very much for watching this video. Yours, Vladimir.